Hello students, welcome to AccountWise Academy. This is Lata Venkateshwaran. Topics to be covered for today's video are future value of multiple cash flows and present value of multiple cash flows. I recommend you to watch my videos on future value and the present value of single cash flow to have a better understanding of what is future value and what is present value before proceeding further. The link of the videos I shall be sharing it in the description box. Do watch the video for a good understanding. Future value of multiple cash flows. What is multiple cash flow? Multiple cash flow means unequal cash flows or uneven cash flows. Let us see how to find out future value of multiple cash flows. Okay, so the future value of a series of unequal cash flows is calculated by summing individual future values of cash flows. Okay, let us see an example for this. For year 1 and 2, 1, 2 and 3, you have uneven cash flows, that is multiple cash flows. For example, 750 for year 1, 500 for year 2 and 1000 rupees for year 3. We cannot group it all these things together and find out future value as we did in single cash flow. Here it is little bit different. What you have to do is, since it is 750 for the first year, we have to find out for 3 years. Okay, for 750, 500 for 2 years and 1000 for 1 year future value. And then, for example, the amount is xxxxxxxn. If you find out the future value, the total will give you the future value of the unequal cash flows together. Okay, here we found out individually, then we added the individual amounts, then we'll get the together future cash value of cash flows. The formula for finding out the future value of multiple cash flow is the same as we had used for single cash flow. See here, FV is equal to PV into 1 plus R the whole power n. Did we not use the same formula for single cash flow? Yes, we had used the same formula. I recommend you to watch the videos of present value of single cash flow and future value of single cash flow before proceeding to the multiple cash flow. The link of the video I will be sharing it in the description box. Do watch the video. Okay. So here the only difference between the single cash flow and multiple cash flow is the cash flows will be the same for single amount. So you can easily apply the formula here and find out the future value in a single shot. But for multiple cash flows, it is little bit different as we have seen earlier. What did we see? There were different cash flows for different years, each year rather, and we have to apply the formula separately for each year to find out the future value. And then we will total it all together to find out the future value of multiple cash flows. Okay, so FV is future value or the amount of money in the future. PV is the present value. R is the rate or discount rate per period, and N is the number of periods. Let us see how to solve a question on future value of multiple cash flows. The question is, what is the future value of the following series of cash flows given an interest rate of 10%? Rupees 1000 at the end of year 1, rupees 2000 at the end of year 2, rupees 3000 at the end of year 3, rupees 4000 at the end of year 4 and rupees 5000 at the end of year 5. Okay, so see here there are multiple cash flows. 1000 at the end of year 1, 2000 at the end of year 2, 3000 at the end of year 3, and it goes on like that. So we have to find out the future value of series of cash flows or multiple cash flows. Let us see how to solve the question. Solution for the problem. Okay. See, year, number of years, cash flow, future value of cash flow formula, and future value of cash flow in amount. For year 1, at the end of year 1, you are going to receive 1000 rupees. So year 1, leave year 1 at the end of year 1 means interest will be calculated only from the second year onwards, right? So number of years is 3, 2, 3, 4, 5, 4. 4 years only interest will be calculated. For 1000 rupees, it is 1000. What is the formula? FV is equal to PV into 1 plus R the whole power n. That is the formula, right? So FV is what? PV is what? 1000 rupees. And 1 plus R is 1 plus R is equal to 0.1. So 1 plus R is 1 plus 0.1. It is equal to 1.1. 1.1 to the power of n. What is n here? Here it is 4 years. 4. So when you simplify, the amount is 1464 for 1000 rupees for 4 years at 10% interest. Next, second year. Second year again, at the end of second year only you are going to receive. So at the end of second year means it starts from interest calculation will start from third year. So 3, 4, 5. It is for 3 years interest will be calculated. Cash flow is how much? Cash flow is rupees 2000. So 2000 rupees. 2000 into 1.1 to the power of 3. Same as above, okay. Here only cash flow and the number of years will change. On simplification you get 2662. Then 3000 at the end of year 3. Okay, so year 3 at the end of year 3 means 4, 5, 2 years. For 2 years only interest will be calculated. So 2. Cash flow is how much? Cash flow is rupees 3000. Okay, 3000 into 1.1 to the power of 2. On simplification you get on 3630. And year 4, at the end of year 4 means only 5th year is pending. So 1 year interest only you will get. Amount is how much? Amount is 4000. 4000 is the amount. Okay. 4000 into 1.1 to the power of 1, it is 4400. And at the end of year 5, see, year 5, at the end of year 5 you get rupees 5000. Then there is no, because you are going to calculate future value of cash flow at the end of 5th year, so no interest will be calculated. Okay, so the amount is written directly as rupees 5000. On totaling all these things, you have a total cash flow of total future value of 17,156. Present value of multiple cash flows. So it is same like calculating the future value of multiple cash flows. We have to follow the same procedure. Okay. So the present value of a series of unequal cash flows is calculated by summing individual present values of cash flows. So that's all, similar to the future value of uneven cash flows. But one thing you have to remember, what is it is, see, while finding out future value of uneven cash flows, what did we do? N, for first year we took N as 5, right? And for second year we took N as 4. And for third year we took N as 3 and so on like that. But this is opposite now. For finding out the present value of uneven cash flows, N for first year it will be 1, for second year it will be 2, for third year it will be 3. So it is like counting normally, and if you are going to find out the future value of uneven cash flows, it is like counting backwards. Okay, this if you understand clearly, it will be very easy for you to calculate uneven cash flows of present value and the future value without any mistake. Formula for finding present value of multiple cash flows. So the formula is the same as single cash flow. PV is equal to FV divided by 1 plus R the whole power n. Okay, PV is the present value, FV is the future value or the amount of money in the future, R is the interest rate or discount rate per period, and N is the number of periods. Similar to future value, here we are going to find out individually for each year separately if the cash flows are uneven, And then we are going to add out all the individual items and find out the uneven cash flows, present value of uneven cash flows. Okay. Let us solve a problem on present value of uneven cash flows. Okay. So the sum is a small scale businessman receives income from his business at the end of each year. He earns rupees 1000 in the first year, 3000 in the second year, 5000 in the third year and 7000 in the fourth year. An annual interest rate of 7% is applied. Calculate the present value of the cash flows today. So it's all what it is. Uneven cash flow 1000, 3000, 5000, 7000. So what we have to do? We have to calculate for each year separately and then sum it to find out the present value of the cash flows. Let us see the solution now. See, solution is the same as for future value. See, table is same. Year, number of years, cash flow, PV of cash flow, PV of cash flow, formula, this one is formula and this one is amount. So year 1. So what did I say? We have to count it in a normal way to find out the present value of cash flow. Right? Uneven cash flows. For year 1, number of years is also 1 and cash flow is how much? Cash flow is 1000 rupees. See here. So 1000 rupees. So apply the formula. What is the formula? PV is equal to FV divided by 1 plus R the whole power n. So what is FV? FV is 1000 rupees. And R is how much? 7%. R is equal to 0.07. 7% is 0.07, right? So 1 plus R is 1.07. So it is, when applying the formula with the amount 1000 into 1 divided by 1 plus 0.07 to the whole power n 1. So n is 1. Okay. On simplification you get 934. For year 2, same year 2, cash flow is 1000, 3000 rupees. See 3000. 3000 into 1 divided by 1.07 to the power of 2 is 2620. 5000, 5000 into 1 divided by 1.07 to the whole power of 3 is 4081. And year 4, n is 4. Amount is how much? 7000. So year 3 it is 5000 and year 4 it is 7000. 7000 into 1 divided by 1.07 to the whole power of 4 is 5340. On summing all these things, we get total value of present value of cash flows, inflows is 12,975. Do like our video and share it with your friends if you find it helpful. Subscribe to our channel, which will encourage us to make more videos like this one. If you would like to inquire about the accountancy classes which I take, or to get more worksheets for problems with solutions, contact us at account.wiseacademy@gmail.com. Thank you for watching.